watching Business Incorporated live from Channels HQ. Coming up, AfDB Sustainable Energy Africa Fund for Africa approves $1 million reimbursable grant to develop bioenergy plants in Ghana and Sierra Leone. Egypt secures $10 billion green funds during COP27. Kenya records slight drop in inflation rate from 9.6% to 9.5% in November. Great to have you join us. First off, let's kick off now with the markets. Let's look how money is performing at intraday, starting with Africa. We see its positive sentiment there with the Nigerian NGX there up 0.17%, continuing yesterday's bullish performance. And we see Africa, South Africa there, GSE index up 0.60%. Other markets we track, we see Egypt, the EGX 30 also in the green, up over 1%, almost 2% at intraday. Big move there from Egypt. And we see Kenya closed negative yesterday, down 0.59%. Well, let's take a peep into trading at intraday at the NGX. Joining us now is Bolade Agbola, investment research analyst at Meristem Securities, joining us via Zoom. Great to have you on the program.
Good afternoon.
Yeah, thank you for joining us. So what's the sentiment like on the NGX now? We see it's up 0.17% last time we checked.
Yeah, so the sentiment in the market has been sideways. We see market breadth above 1, which signifies that there are more gainers than losers in the market. However, the market is in the negative zone, losing about 0.2%. And this is driven by the loss on the MTN ticker, and we know it's a bellwether ticker, so that's why that's the sentiment current in the market.
Right, that means the market has flipped from positive to negative already at this hour. But how do you see the market closing? Right now at the end of trade today, being the first trading day of December.
Like I said previously, the weight of MTN on the market is large, and trading at a huge loss already can drive the market to a close. However, we do not rule out the positive sentiments in the market in which MB is gaining, and some banking tickers such as GTCO, Access4, Zenith, and UBA that are currently gaining, which can likely still drive the markets to a positive close at the end of the day.
All right, we'll be watching out for that close. But, the first trading day of December, what are you expecting going forward? What are you expecting positive sentiment for the month of December?
For the month of December, yes, I expect positive sentiment. And this is driven by the fact that most of these large weight tickers, the bellwether tickers, are at low valuations. So there's room for bargain hunting on those tickers. And we also see that there are some disclosures, such as the bonus issued by Nigerian breweries and the share buyback by Dangote Cement, which is likely to, bolster investor sentiment, and they would like to position in these stocks and then create a positive sentiment in the market.
All right, thank you so much. That was Bolade Agbola, investment research analyst, Meristem Securities. Thank you for giving us the update at intraday on the NGX.
Thank you.
All right, so that's the sentiment there for the NGX. Let's move on to the Middle East now. We see markets we track in the Middle East. It's mostly positive sentiment we're seeing at intraday today. We see the Abu Dhabi there index up 1.54%, so it's positive. We're seeing in the UAE zone there. Moving over to other markets we track, like Saudi Arabia and Qatar, we're also seeing some positive moves there. Just Saudi Arabia index there down 0.36%. We see Qatar there up 0.77% at intraday. We'll be watching out for how the markets close at the end of trade today. Let's move on to Europe now. We see the Eurozone recorded its first drop in inflation since 2021. A hopeful sign for households under increasing price pressure. But how investors taking this positive news? Stephen Beasley joins us now from DW. So what do the newest numbers tell us?
Well, following yesterday's comments by the Federal Reserve Chief Jerome Powell that he could imagine slowing interest rate hikes, we've seen that European markets are also responding to that in a very bullish sense. That follows what we saw with markets in the U.S., markets in Asia as well, because, as I said, that means that borrowing costs will begin to level off somewhat, or at least they won't rise as fast. That's good news for businesses, and so equities markets are responding accordingly. We saw that some of the major markets here in Europe, the DAX here in Frankfurt, the Stocks 600, and the FTSE in London, all up around 1% at the opening of markets. We've also seen that the dollar has lost some ground on other currencies as investors are willing to take on a little bit more risk and come out from that dollar safe haven a little bit. That's good news for the euro and for the yen.
All right. What does this mean for European households?
Well, following yesterday's comments by the Federal Reserve Chief Jerome Powell that he could imagine slowing interest rate hikes, we've seen that European markets are also responding to that in a very bullish sense. That follows what we saw with markets in the U.S., markets in Asia as well, because, as I said, that means that borrowing costs will begin to level off somewhat, or at least they won't rise as fast. That's good news for businesses, and so equities markets are responding accordingly. We saw that some of the major markets here in Europe, the DAX here in Frankfurt, the Stocks 600, and the FTSE in London, all up around 1% at the opening of markets. We've also seen that the dollar has lost some ground on other currencies as investors are willing to take on a little bit more risk and come out from that dollar safe haven a little bit. That's good news for the euro and for the yen.
What are we seeing in other markets at this time?
Well, following yesterday's comments by the Federal Reserve Chief Jerome Powell that he could imagine slowing interest rate hikes, we've seen that European markets are also responding to that in a very bullish sense. That follows what we saw with markets in the U.S., markets in Asia as well, because, as I said, that means that borrowing costs will begin to level off somewhat, or at least they won't rise as fast. That's good news for businesses, and so equities markets are responding accordingly. We saw that some of the major markets here in Europe, the DAX here in Frankfurt, the Stocks 600, and the FTSE in London, all up around 1% at the opening of markets. We've also seen that the dollar has lost some ground on other currencies as investors are willing to take on a little bit more risk and come out from that dollar safe haven a little bit. That's good news for the euro and for the yen.
All right, we'll keep tracking those markets, see if the sentiment continues there. Thank you so much, Stephen Beardsley, right there from Berlin. Let's move on to the UK now. It's all about the strikes. Let's go to Juliana now, right there. Great to have you, Juliana. So we're expecting a series of strikes expected to take place. Bring us up to speed on what's happening.
Yeah, good afternoon, Laddie. Well, trade unions are going to grind this country to a halt during the month of December. This is the first day of the month, the last month of the year. It is getting bitterly cold, and those bitter disputes about pay and working conditions have exploded, and there does appear to be a coordination between various unions, and we're talking about travel, we're talking about teaching, we're also talking about nurses as well. They are all going to be striking over the next couple of days and weeks, which is going to cause misery for millions of Britons across the country. If you will permit me, I will use my phone because there are just so many strikes taking place at the moment. You'll be forgetting them. So at the moment today, there are strikes with the post office, Royal Mail workers. They're not happy about changes that Royal Mail bosses want to implement. They say they're losing £1 million a day. That's what bosses are saying. And that if they don't make these changes, nobody's going to have a job. They are going to be striking throughout December, again causing misery for loved ones who want to post their presents. Make sure you post them on time. Bus strikes are already happening today. Next week, we are going to see teachers striking. Again, teachers not happy. Lots of support staff are on minimum wage, some between £15,000 to £18,000 a year. Just not enough to cover the cost of living crisis and high inflation. Fresh food inflation has reached 14.3%, according to the British consortium who updated us on that yesterday. The big one, and the one that is going to cause the biggest migraine for Rishi Sunak, the Prime Minister, and the Chancellor Rishi Sunak, and the Health Secretary, has got to be the NHS strike. They very, very rarely do this, but their union bosses, so that's Unison, Unite, GMB, yesterday they conducted a strike. More than 80,000 NHS workers agreed for this industrial action. They will be downing tools. Now, this is going to be particularly politically sensitive because we know the NHS is in crisis at the moment. We had data yesterday showing that thousands of ambulances have had to wait outside of hospitals for up to an hour with very sick patients just because there's not enough spaces. If they down tools, this is going to have significant knock-on effects for those patients who have been waiting years and years for surgery they couldn't get during the pandemic because hospitals were dealing with COVID. That's a major issue, and it just keeps going on and on and on throughout the entire month. So more headache for the Prime Minister, who's trying to put out so many fires. But the fact that we are going through a significant cost of living crisis, millions of workers in this country have had enough. They said they're not working until they see it being reflected in their pay packet at the end of the month.
All right, I guess be watching out for Rishi Sunak's next move with all of these strikes coming up now. But we also got that report that Brexit added about £210 to household food bills. That's another big one.
It is another big one, and I think it's pretty safe to say, Laddie, that the elephant in the room in Britain is the fact that Brexit just hasn't worked. I think any reasonable economist, any kind of notable commentator will admit to that. I think the issue now for the government and for observers is to what extent has Brexit put Britain in a worst case scenario. And the data or the research that was conducted by the London School of Economics, which is what you're referring to, has shown that in the 24 months to the end of 2021, it's cost every household in this country £200. If you put that all together, that's about £5.8 billion. That is a lot of money, especially given the kind of furore and the sentiment in the run-up to the 2016 referendum. We were told all of these amazing things would happen. It's just not happened. Things are getting worse. We do have a new International Trade Secretary, Kemi Badenoch. I know she's doing her best to try and forge these new trade partnerships, but they're just not going to take away the trade relationship that we had with the EU. They are our closest neighbours. It's just much easier to trade there. But unfortunately, since we officially left a couple of years ago, it is making the lives of small to medium-sized enterprises. We know SMEs are the engine of any great economy. It's made their life worse. Just too much bureaucracy, too much extra paperwork. It's costing them too much to do this. And also as well, it's affecting the hospitality sector in the UK because so many people decided to leave and they're not coming back. They're not coming back because it's just so difficult for them to get the right information to come here. So again, this sort of data, which we do receive every day, just goes to show that Brexit really is not working. But the way the news works here in this country, Laddie, is that they deal with one issue at the moment. And unfortunately, for those who are affected and impacted negatively by Brexit, it's at the bottom of the agenda at the moment. But come the new year, I'm sure this is going to be right up in the headlines because people want results. They were promised that we would be seeing all these wonderful things, new trade relations, better job opportunities. We're just not seeing it yet.
Yeah, not just yet. And obviously, I know the markets must be reacting to all of these other headlines there with the strikes and rising food inflation there. How are the markets looking at this hour?
Not doing too bad, actually. There has been a lift in some commodities, which has lifted up the blue chip index, so it's in positive territory. We're also seeing a 16-week high for the British pound against the dollar. So it looks great, but things are, struggling underneath the surface. So the all-share intraday is up 0.18%. FTSE 100, that's up by 0.09%, and the FTSE 250 is up by 0.97%. In the currencies market, the British pound continuing its rally against the dollar, up by 0.62% against that, up by the same amount against the euro, but the British pound at intraday is currently down against the Japanese yen by 0.09%.
All right, Julian, I guess I'll be watching out for the close today. Thank you so much.
Thank you.
And now for the commodities market update, we're looking at the dairy product market. There we see the aggregate demand for milk products in Nigeria, about 1.7 million tons. Nigeria produces only 500,000 tons of milk, resulting in a supply gap of about 1.2 million tons has to be met by imports. Now let's talk to Miriam Ode, analyst, financial derivatives company, join us via Zoom. Great to have you on the program.
Thank you for having me.
So what would you say is responsible for this over-reliance on imports, in the milk industry?
I feel like there are three main factors that are affecting the milk production in Nigeria, one of which is the heavy reliance on cattle or cow milk. And if we actually look at it from a closer view, we see that Nigeria is the largest producer of soybeans, which milk could be derived from. It's the largest producer of soybeans in Africa, not in the world. So we can actually, and we export this soy milk too. So we can actually reduce our exports of soy milk and use this to satisfy our demand for milk, since we have a supply gap of 1.2 million tons of milk. So if we reduce our exports of soybeans, which we produce more than enough, we can actually meet our demand for milk. Also, another factor is most of the people that are rearing the cattle are in the informal sector. So this informal sector is not accounted for when counting the GDP. So they are not part of the 500,000 tons of milk that is being produced in the country. So the government needs to try to integrate the cattle rearers, those that are in the informal sector, into the formal sector so that we can be able to benefit more from their production of milk.
All right, but we've seen the average price of tinned milk has increased from about 280 naira to 400 naira, quite a big jump last year. Do you see the price tapering anytime soon?
Price for milk would not taper anytime soon due to increase in the prices of its inputs, such as corn and fertilizers. Corn recently had a spike in its price due to Mexico's ban on the genetically modified corn from America. And fertilizer prices have increased from 35,000 naira, has increased to 35,000 naira from 5,000 naira 5 years ago and 18,000 naira last year due to the supply shortage in the country. If we even look at the ongoing conflict between the cattle herdsmen and the farmers, this is affecting the supply of both cattle and milk in the economy. So this would affect the price of milk since supply is reducing and demand is still at 1.7 million tons.
And carry on.
Okay, so with the increase in supply, we expect the price of milk to still increase. Keeping in mind the fact that dollar is still strengthening, since the beginning of the year, dollar has strengthened by 20% against other major currencies, and this will affect our importation bill because it will make it more expensive for Nigeria to import this milk, and this would later translate to the prices of tin milk in the country.
And there's that supplementary demand, with chocolate drinks, and we've seen cocoa prices actually, decline. Do you think that would reduce the demand for pasteurized milk?
No, based on our research, this would not reduce the demand for pasteurized milk because the fall in the price of cocoa is just temporary. If we look at the global commodity markets, if looking at the domestic cocoa market, that is Nigeria's export of cocoa, we can already see that it's being affected by the black pod disease, which will affect 15% of our export of cocoa. So that means supply of cocoa is going to fall. And like I said before, once supply falls, price would increase. So cocoa prices are going to increase in the near future. And let's even forget about the increase in the price of cocoa. On the other hand, cocoa is not the but the only product or the only commodity that is affecting the price of milk. We still have other commodities such as wheat, such as bread, all these, and butter. All this could affect the price of milk, and this will still keep the demand for milk relatively.
All right, I guess no commodity is safe at this time from price increase, and with food inflation we're seeing all over the place. But thank you so much. That was Miriam Ode, analyst, Financial Derivatives Company. Thank you.
Thank you.
All right, we're talking commodities there, and we were looking directly at the dairy market. Let's move on to other stories now. We see the Sustainable Energy Fund for Africa has approved a reimbursable grant of $1 million to New Africa Impact Limited to prepare two bioenergy plants in Sierra Leone and Ghana. They will each output 5 megawatts of electricity and 11 megawatts of heat. The multi-donor special fund, which is managed by the African Development Bank, reimbursable grant will strengthen the project's bankability by supporting technical feasibility studies and regulatory structuring. Plants are expected to add 10 megawatts of electrical and 22 megawatts of thermal capacity in total. It's expected to provide electricity to 5,000 households and create 125 temporary jobs during the construction phase, with another 60 people employed to operate the plant. And Egypt's Minister of International Cooperation has revealed a $10.3 billion financing package for government sectors were offered for green transformation under the Nexus on Water, Food and Energy program. The announcement came during a meeting with President Abdel Fattah al-Sisi and Prime Minister Mustafa Madbouli, reviewing the results of the UN Climate Summit COP27 in mobilizing development funds. The meeting highlights the financing aim to implement a number of diverse national projects in water, food, energy, and transport sectors. And East Africa's biggest economy, Kenya, recorded a slight drop in its inflation rate as it fell from 9.6% reported in October to 9.5% in November this year. According to the country's National Bureau of Statistics, the reduction, the first time since April this year, is attributed to a drop in price of fuel and basic food products like cooking oil. The KNBS report showed that the food and fuel prices remained high at 15.4% and 13.8% in the month under review, while cooking oil prices also reduced from 360 Kenyan shillings per litre in October 2022 to 340 Kenyan shillings per litre last month. Meanwhile, the prices of maize and wheat flour remained high at a rate of 30.9% and 38.2% each, while sugar price also remained at a high of about 23.2%, as a kilo retailed at around 160 Kenyan shillings across major supermarkets and small retail shops. And the World Bank says diaspora remittances within sub-Saharan Africa slowed to 5.2% this year when compared to 16.4% growth recorded in 2021. The International Finance Institution made this known in its Migration Development Brief 37 report released yesterday, where it notes that although financial flows to Nigeria and other sub-Saharan African countries is slowing down, it will reach $53 billion this year, up from $50 billion in 2021. At the same time, the World Bank says remittance flows to sub-Saharan Africa surged 16.4% to $50 billion during 2021, which is the strongest increase since 2018. Meanwhile, the World Bank projects a 3.9% growth rate in remittances to sub-Saharan African countries in 2023, which represents a 1.3 percentage points decline from 5.2% growth for 2022, while it sees the value of remittances to the region at $55 billion for the next year. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ladi Williams. Bye for now.